What's up, guys? Welcome back to another episode here of the BlockHash podcast. Today, we have on another wonderful guest, Matt Carr, co-founder of QCI Partners, an investment advisory firm specializing in alternative investments in digital assets. We're going to dive into derivatives today, options, and why this is such a critical juncture here in the market and what this stuff means as it comes up and gets more supported. Matt, welcome to the show. It's a pleasure to have you on and chat with you today. How's it going? How you doing?
Oh, great. Thank you for having me. I'm doing well.
To kick things off, I'm sure people would love to learn a little bit more about yourself and about QCI Partners. What can you tell us about your backgrounds and maybe how you kind of came up in finance and what led to QCI?
Yeah, I started my career at Boeing, the aerospace company. I was in finance there. And I ended up transferring when they divested their rocket business to United Launch Alliance. And that was in Denver. And I worked in corporate finance there. I met my co-founders, Steven Melanson, in college when we played soccer together. And having an asset management firm was something we always talked about doing. We went separate ways. He went to Columbia in New York and worked out there a few years. And it wasn't until 2011 that we really got it together, incorporated, took our first outside clients. And that was the genesis of our company, QCI. So we've been at it ever since. We manage investment portfolios for individuals and charities and institutions. And we now have a digital assets hedge fund that we have started and launched, QCI Capital Management.
Nice. Did you start that up, the digital asset side, just recently, like this year or last year?
Actually, we started in digital assets in 2016. We were the first investment advisor in the state of Colorado to accept crypto fees from clients. So that was kind of an interesting discussion with the state of Colorado, explaining why we would even want to do that. And so we started with separately managed accounts for individuals in crypto. At the time, it was predominantly Ethereum, which was relatively new, and Bitcoin, of course. And it just grew from there. You know, we had a core clientele group that was really big into crypto and well-versed. And it's been an interesting journey having this discussion across the board with different sets of clientele and, watching it grow.
Yeah, it's definitely grown and evolved quite a bit over the last 8 to 9 years or so. I definitely remember that market for Ethereum. Ethereum really kind of pioneering the entire crypto market, and everything was built on it originally. Not too many other chains compared to today, where there's millions of tokens out there. There's hundreds, if not thousands, of chains and blockchains being put together. Some proposing to be better than others and doing things differently or focusing on different niches and industries. So it's a much more a diverse ecosystem, which also makes it pretty exciting. I'm sure exciting for you guys too, all the opportunity that it can present and the things that it can do. Why did you guys want to invest into digital assets, into this intersection, I guess, more specifically with digital assets and traditional assets? Because I know that you guys are very focused on things like derivatives and options. Was there a light bulb that went off there in regards to some opportunity, or maybe that coming to fruition?
Yeah, we're really kind of at this juncture at a moment in time where the regulatory environment domestically is changing drastically. And with regard to derivatives, it's effectively like the infrastructure around the tokens themselves. Just like you have puts and calls, options around stocks, you can create different return profiles. You can manage risk, you can leverage upside. And really, there was only a small float domestically of options that traded on Bitcoin. There used to be an exchange called LedgerX, which actually shut down. So all of the option trading around crypto, we've actually been doing offshore on Deribit for offshore clients because it just hasn't been allowed in the United States, which now is going to change. It's already changing. We have the ETFs, the exchange traded funds, which have been a huge success. And currently, I think there are 50 of them filed for all different assets, Dogecoin, Cardano, Ethereum, Solana, and many of those will have options on them. So this is kind of a moment where a lot of this functionality, a lot of the tooling is going to become available domestically. And the United States is just the largest capital market by far. So we're excited to participate in that kind of in a nimble, aggressive fashion. And that's really what we're doing with the fund, and we're doing that at QCI Partners too.
Yeah, it's kind of crazy that just a year ago we got the first Bitcoin ETF, and now a year later we have dozens and dozens of different ETFs getting filed, and now a lot of these institutions and investors looking at different ways to invest into digital assets and different financial instruments that can kind of facilitate that. Um, and want to kind of get a little bit deeper into derivatives with you and how you see that kind of starting to evolve, and maybe how that's going to start changing the investment approach around digital assets, because there seems to be a much larger demand for it now between a lot of different funds out there, investors, um, institutions, asset managers. Like there's quite a big push for it.
Yeah, if you take a step back, there's going to be a lot of different players that come to the table. There will be institutions that are interested in creating yield, and there will be individuals looking to be more aggressive. Some of them want to manage some of the downside risk. Our view is we're kind of like a speedboat amongst the cruise ships. So we can get in and out quickly. We can have different return profiles. We can dial back exposures quickly. And, when I look at these ETF filings, when I look at the large banks, the Wall Street firms, insurance companies, I think there are 20 states in the United States currently with bills proposed to purchase some amount of crypto, predominantly Bitcoin. But you have a good mixture of institutions and individuals that will be coming to the table to transact, and they're going to have different goals. And the one thing that we all agree on in crypto is it's relatively volatile. So in the options world, if the underlying price of the asset is very volatile, there's a lot of implied volatility. You could think of it as like extra embedded pricing, and it gives you something to play with. And we're really excited about this. I mean, this is something we've been doing, like I said, on Deribit offshore very successfully. And I think it's going to be, a great time to be in the space. And it's one of the few times that you're going to be able, as an individual, to get involved in an asset class prior to the institutions getting involved. I mean, it's usually the opposite. It's usually you buy the IPO after all the VCs have been in it for years, after the banks know all about the financials and everything. This is kind of putting legacy finance on its head, where the individual can actually participate and the institutions are coming on board and they're telegraphing it. The financial filings are out there, the states are putting these filings out, so it's coming. It's a question of precisely when and what the volumes really look like. But I think they're going to be tremendous.
I want to dive into options a little bit more too. Can you also explain maybe why options around digital assets, which is going to be quite new for a lot of people to learn about, could be more strategic and competitive for investors, even given the fact that digital assets are volatile? I know the volatility creates a lot of opportunity, also creates a lot of risk, but at the same time, I think options offers a good alternative to some of that volatility too.
Yeah, I think it's kind of dealing with different investors and meeting them where they're at. On the crypto side of things, I think traders and participants would be familiar with perpetual futures. And there you pay a variable funding rate. And just like the other weekend, we saw Ethereum drop almost 40% over the course of less than a week. And there were over $10 billion of leveraged positions that were liquidated. In options, you can create leveraged upside exposure without having a liquidation risk. So, and you also understand your funding from day one. If I get into a perp, I don't know what my funding is going to look like tomorrow or even an hour from now, because it's variable. It is a market price, essentially. So on the crypto side, I think anyone that's participating in perpetual swaps, or futures, they should take a look at options. They can get the same exposures and protect themselves in different ways. If you look at it from more of a legacy finance background, you can manage downside risk. And some of our clients are saying, can we create 18, 20% yields for the calendar year? But I don't want to lose more than, 5 to 7%. You can start to go into the market and through a mixture of holding the spot asset, Bitcoin, let's say, and buying and selling options around it, you can effectively construct a return profile that can be very much customized. And it has an endpoint because the options expire. So there's some calculus to it. It's not open-ended, like just owning an equity or owning Bitcoin outright. So really it's about fine-tuning and understanding what it is precisely that the institution or the individual is looking to accomplish and what they're comfortable with.
Is this something that you advise your clients on generally when they're kind of exploring these different types of derivatives for digital assets? You talk about options and some of the ways they can maybe structure a good portfolio that way.
Oh yeah, digital assets have been something we've been discussing for years with clients. I would say that we probably proportion of our assets are involved in digital assets, if not tangentially through. We were early in the micro strategy convertible bond trade in 2022, and that had to do with optionality too. That's more on the legacy side, but it's the same concept. And on the crypto side, people tend to be really interested once you talk about leveraged upside. Where you have a situation where Bitcoin's at 100, we're flat, you ride it up to 130K per Bitcoin, then you flatten out. But if it gets up to like 180 or 200K, you're getting 2, 3, 4 times the performance of Bitcoin to the upside. And that's something that I think, we've had success talking to people that, are coming from the digital asset side, purely saying, if they're very bullish, over the calendar year, I can participate to the upside with gearing, with leverage, and I'm not, open to liquidation risk or anything like that. So, there's different conversations, and it just depends on, who you're talking with. But I would say in general, people are more open-minded. Initially, some of our clientele, they were very skeptical about digital assets in general, and so you just have to go along the conversation and explore different relative value. I remember sitting with one guy saying, there's about $700 billion worth of airline miles that exist. And those aren't physical. You touch them, they're digital. They're, on computer servers of airline companies. Are those real? And he said, yeah, I think those are real. I said, well, Bitcoin is decentralized. It's a ledger that anyone can look up, transact in real time 24/7. Do you feel that has any value now? And it was kind of a relative value discussion that kind of brought a different perspective. So I think there are different ways to come about it and work toward it.
Yeah, you bring up an interesting point with stuff like airline miles. Like, people used to look at crypto generally, and they kind of do still, but not as much as they used to, especially Bitcoin as being something that's too volatile or skeptical or too risky or more gambling-esque. And that narrative has changed a lot over the years. And now there's quite a lot of mainstream understanding that most of these assets, especially Bitcoin, has a lot of long-term standing. And things like airline rewards and points, traditionally in finance have been, something that's, of value to people too. And I think, with blockchain could be also opened up and brought into markets at some point as well. And even tokenized, which is a big talking point right now, RWAs, real world assets, things that are traditionally intangible or illiquid becoming more tangible and more liquid. Do you see maybe some of these derivatives making their way into the tokenized blockchain space, maybe at some point, maybe bringing some of these things to markets a little bit more readily?
Yeah, I mean, really, it just comes down to a regulatory question. I think the answer overall is yes. That's the direction we're headed. You're already seeing discussions about tokenizing private shares of private companies. So kind of abrogating the IPO process, listing a stock, which is very expensive. It takes a lot of time too. There are a lot of hurdles there. It really is a discussion about democratizing and opening the capital markets. And there already are Web3 exchanges where you can trade options on dozens of meme coins, Dogecoin or, what have you. So the tooling for trading an option on any asset, whether it's a tokenized real world asset or a meme coin or Bitcoin or a share of Tesla, the tooling is really the same. It's just about, what venue are they housed in? How are they regulated? How are we going to treat this? Who's bringing it to market? And then what do the participants bring to the table? What do the flows look like? What's the liquidity? That's something we have to take into account of, what are the flows daily? Are we going to move put calls, in a situation if they're very tight or illiquid? But I think a lot of that is going to change. I mean, just to give you an example of sizing, in October, the offshore options exchange Deribit had about 10 to 15 billion dollars of options open, and by December it had already grown to 55 billion, and it's just going to keep growing. And like I said, that's offshore. Domestically, the options on just the IBIT ETF are already half of the Deribit exchange. So that's just one ETF. I think we're going to be talking trillions of dollars here within a year, 18 months on these options. And it's going to give a lot of functionality and opportunity to people that are going to be participating in it.
What do you think the key for success is here? Is it opening this up more to the retail market so they have more options to explore options and derivatives, as well as access to it? Because it's been something that's been really tricky the last few years, especially in the US, with regulations being really stringent towards digital assets and not allowing a whole lot of different types of derivatives or staking or ways to kind of experiment with different financial instruments. And it seems like it's done like a full 180 now. We have a whole different administration and government with a different outlook, and it's accelerating really quickly in a positive direction. Does there need to be more work done on a regulatory standpoint? I'm just kind of curious from your perspective, if there's still a lot of restrictions there, or if it's starting to change rapidly.
But I think it's definitely starting to change. I think all the brokerages are seriously looking at digital assets. I know Charles Schwab is actively doing that. We use them as a custodian. Robinhood did a great job of bringing options to retail. I have to give them credit. And the functionality is there. I think retail is going to be an important part of this story, but I think by and large, the largest component of value, most of the assets are going to be coming from the institutions. And the reason is they're going to look to harness the volatility of these assets to create things like yield. And these are going to create products, ETFs, mutual funds, structured products. This is like Wall Street, putting these assets to work at scale. And pensions are going to want to invest in this, and it looks like nation states are going to want to participate, US states, as I mentioned. So by and large, I think the preponderance of the assets will be coming from the institutional side, even the nation state side. But the opportunities are going to be spread across the board because these parties are going to be coming to the table with different goals. And that's really where the market is made. And, my viewpoint is, we operate a hedge fund and SMAs. We're very opportunistic and we're very nimble. So I can't wait for these large insurance companies and things like that to come with these huge pools of money that have their own mandates, their own rules. I don't have to follow any rules. I just am targeting ROI. And I just think it's going to be replete with opportunity. I never would have imagined in my career that I would have had the opportunity to experience and participate in a new asset class. When Steve and I were starting QCI, we never dreamt that there would be, an entirely new asset class. So this is just really exciting.
Yeah, looking at the expansiveness of, I guess, crypto and Web3, obviously Bitcoin is its own kind of league in terms of being an investable digital asset. But looking at all the different areas, ranging from gaming to healthcare to insurance to the sporting world. There's so many different areas that I think digital assets can really touch. Are there any in particular that maybe you are the most optimistic for, or that you see the most opportunity in terms of kind of leading the way here with digital assets and maybe some products around them?
Personally, I am probably most optimistic around the oldest and largest Bitcoin because of the discussions at the nation state level, where you really have very big, serious decisions being made. Is this an international store of value? Is this a digital gold? I think if that turns out to be the case and we see it used in clearing for central banks and countries are storehousing it, which the United States now is talking about doing, like a digital Fort Knox, effectively, that really changes the conversation around all digital assets. It brings an imprimatur and a level of seriousness and respect to the entire asset class. You can no longer deny what's going on here, with that being the case. So I think everything really would flow well from that. And, I'm still bullish and excited about all these other use cases. But I really do see that as a tentpole moment.
Yeah, I had Brian Morgenstern on recently for an episode back in January, and he was the former White House press secretary, deputy press secretary, also for the Treasury, the U.S. Treasury, and he works over at Riot Labs. And we were having a pretty deep discussion on the Bitcoin strategic reserve that seems to be just around the corner here, and talking about nation states and them loading up on Bitcoin. And now a lot of states kind of going this direction too. Almost half of the states in the U.S. seem to be kind of on that path forward, and probably all of them at some point. Do you think that that's the right strategy? Just kind of, taking a step back and looking at things from a 10,000 foot view, seeing governments and nation states and states themselves and municipalities heavily investing into Bitcoin and putting it on their balance sheet. What are your thoughts about that in terms of that being a positive precedent for the industry?
I think it's a big problem that most nations are looking to solve. And to give an example, the discussion around the BRICS, there's this discussion that they're not quite happy with the dollar. They're looking for an alternative. They're not happy with their own currencies, and they don't trust each other's currencies. And if you look at the gold system, it's cumbersome, it's expensive. If you don't hold your gold, do you really own it? I mean, Venezuela's been trying to get their gold out of London for over 20 years. This is a nation state, and they can't get their gold back. So you got to say, is that their gold? And you also have to trust if your counterparty has the gold they say they have. And these BRIC nations don't necessarily trust each other either. Bitcoin offers an opportunity where everyone can transact and clear, but there's also visibility. There's no storage costs or de minimis storage costs, and it's easily, readily moved. So it checks a lot of the boxes there. It seems like it could solve some of these clearing issues at that level. And it's a big problem. So, my background, in corporate finance, I dealt some with foreign exchange. So when I first came across Bitcoin, I thought of it like FX, a digital FX. And I, had always kind of had that in the back of my mind. The fact that we're now seeing nations talk about this, I think it's a really big deal. And I think it is kind of a good use case. And I think we're going to see adoption in it. I think participation will flow from there. Investment will flow from there greatly. And it makes sense in my view. I think it's just a difficult discussion initially. We have to overthrow norms, but leaving the gold standard, we overthrew norms. On and off the gold standard through the world wars, we overthrew norms. Sometimes new things come about and you have to adopt them and look forward.
I agree. And we live in a digital age, and digital age requires digital solutions, I believe. We have to keep up with technology so it doesn't outpace ourselves and our economies and our financial systems. So I think it's a good thing. But even legacy markets like precious metals, for example, like, do you think that those still have a lot of staying power? I think not Bitcoin, gold has actually hit all-time highs and is doing really well right now still, despite the fact that it's kind of an old and cumbersome asset for a lot of nation states to hold. Do you think that there'll be a switch away from precious metals over time, or do you think that they'll continue to be a staple?
I think over time there will be a diversification. I think the demonetization of gold is a long way off. That's something that's internationally accepted and been around a very long time. For clearing purposes of nation states and things, maybe we see some substitution. But really, I see it as a diversification into the digital world. And, kind of like you mentioned, I have two young children. And when you look forward 20, 25 years, you just see already how these young guys, they're so digitally capable. I was nowhere near that when I was young. When I was 7 years old, I didn't have an iPad. I didn't have a computer at my house. So they're so comfortable with this. You see where we're headed, and there's no question about it. So, yeah, and in just my experience too, personally, I mean, if I talk to clients that are millennials, fewer of them own physical silver and gold than when I talk to clients that are boomers. Just across the board, there's a significant differential there. And I imagine then it's going to be the same step function from millennials, down to the next group. So, I think this is a big transformation that's happening. We're upgrading all of the electronic rails, essentially, payment rails, custody rails. A lot of these legacy financial systems are decades old. Swift and everything, credit cards, these technologies are older than I am. And we're due for an upgrade. And now we have these technologies that we can apply. So it's dynamic. There's incumbents that are going to have to accept it or evolve, but that's always the case. And as an investor, as someone looking forward, it's exciting.
What do you think about this window of opportunity that seems to exist right now, with digital assets getting much more attention and there being so much optimism around them, and also a lot of these financial instruments around derivatives also being drawn into the fray? Do you think that this is a window that's going to get smaller and smaller for retail going forward, given the fact there's a lot of larger players, investors, institutions out there that are starting to get involved themselves? Like, is there an urgency for retail to get into this market?
Yeah, I think this is a unique period, kind of as I mentioned earlier, where it's telegraphed that institutions and nation states are going to be participating. We have a very unique situation where, members of the new administration are heavily invested. They've disclosed, Secretary of Commerce has over $200 million of Bitcoin. The president has issued mem coins. This is effectively gone. This is a 180 from where we have been. And, the gates are really opening up here. It's just not common in my career or experience to see a situation where an individual can get involved, can participate, and know that they're really ahead of the curve to a certain degree. Having said that, I mean, it's still going to be volatile, just as we saw recently. I mean, many of the coins selling off, 30, 40% over a weekend. It's a market that trades 24/7. So I think people need to be careful. They can't get in over their skis. People shouldn't be trading with leverage. You need to be, I think, careful about it. But I think it's a huge opportunity.
I saw a study recently. I'll send it to you later. Maybe I'll put a graphic up here too. But I believe there was a study done on Gen Z and Gen Alpha, them coming up, and Gen Z is obviously in the market already. Gen Alpha will slowly start to get there more and more, but 78% of Gen Z and Gen Alpha are starting to look at savings just generally, and then also retirement savings being in digital assets and alternative assets going forward, which is quite interesting compared to my generation and those prior. having, I think, a bit more of a focus on traditional markets. I don't know if it's just changing times or not, but it's quite interesting to see that there is a larger focus on assets that are in the digital realm and that are, I don't know if it's just that they're more volatile with more opportunity or more exciting, flashing objects and shiny things that people want to consider just because it's, the trend of the time. But I thought it was pretty interesting. I'll share that with you later. But do you think that there's any impact on younger generations coming into the markets and maybe how that could also affect investment thesis for how some of these markets might perform? It seems to be pretty good for the digital asset markets flourishing, and for traditional assets, it seems like there's definitely a lot of adapting to do.
Yeah, I think there's really a coming of age of a group of people who maybe are more cynical about the legacy financial asset side. You look at the millennial generation, they saw the financial crisis. The thing about digital assets is that they don't necessarily have an issuer. Bitcoin doesn't have a company behind it. So I don't have to trust some company or some jurisdiction or some guy. The issuer risk in some of these tokens is relegated. So you have price volatility, but you have price volatility in every asset. You have to be realistic. The stock market has price volatility also. So it's, I think, really just kind of being comfortable with a new asset class, a digital commodity, in the case of like a Bitcoin or now ruled Ethereum in the United States, that has no central issuer. So you take away that entire headline risk. You're not going to read anything bad in the news about the CEO of Ethereum. And you're dealing with price volatility, which is always there in investing, but that's always going to be there. So it's not something you can avoid. I think younger people are more open-minded to it. I think, the digital gold use case is something we've had a lot of success discussing with other clientele that digital assets maybe are more new or exotic to. And there's no question in my mind, I think you said almost 80% of this younger generation. I believe it. I think it's going to be 100%. People are going to see this as no different than real estate. They're going to see it no different than owning shares in Apple or owning any corporate debt. It's just going to be another sleeve of what they're doing in investing.
Fun fact, my grandma still thinks that I work for the Bitcoin Corporation when I tell her that I'm investing in digital assets. It tells you a lot about how different generations view some of this stuff. We have a lot of jokes about that over the holidays.
I have the entire spectrum in my family where the grandparents, ask about it, but my little boys love Dogecoin and Bitcoin. They have stickers and everything. So it's entertaining to them. It's much more fun to talk about that than stocks. So it has its appeal across the board.
I think you probably answered this earlier, but just to kind of come back to it with QCI, what are some of the types of clients that you guys generally work with? Are they like family offices? Are they private clients? How does that kind of vary for you guys?
Sure. So we work with individuals. We do work with family offices, trusts, and charities. But they can, individuals can find us at QCIPartners.com. Fund is linked off that also. That's a private vehicle that is launched. But that's really our clientele, our individuals, predominantly small business owners.
And then what is on the roadmap for you guys this year? Are there anything in particular that you guys are doing in terms of new advisory related services, different types of investment exposure that you want to get into, or what does the horizon kind of look like? How do you want QCI to kind of shape up over 2025?
I think this year is a story of, taking a step back and just reading the room. And we're in a different room. We're in an entirely different environment with digital assets. It's a discussion we're having with all of our clients, whether they want to generate yield and not take downside risk, whether they want to participate in just, a huge change in capital markets, or whether they want to be more aggressive. And that would tilt more, to our individual SMAs and the fund. So it's kind of across for this calendar year. This is something that we see. There are just a slew of catalysts. Timing in particular can be very difficult, so you need to be mindful of that and sizing. And we expect it to be volatile. So that's really what we're looking at for this year. Exciting.
That's very exciting. I think a lot of interesting things are going to come out of this year for sure, and definitely a whole different landscape seems to be forming around it. So, very exciting indeed. If someone wants to get in contact with you or QCI, is the website the best place to go? Do you have a LinkedIn, or where can people reach out?
Yeah. And our website, QCIPartners.com, is the best place to go, or reach out to me. I'm just Matt at QCI Partners, and everything else is linked off that: Twitter, LinkedIn, everything else.
Awesome. Matt, this has been a great conversation. Definitely appreciate you coming on today and talking about the derivative side of digital assets and options and what this market is kind of looking like today and how it's going to shape up going forward. Again, very exciting times. So keep me posted on what you guys are doing and your insights into the market. And maybe we can have you back on relatively soon and talk about new things as they develop.
I'd like that. Thank you for having me.